Hey, good morning everybody. My name is Cliff Backus and this is your pushbuttonstocktrading.com daily video market review weekend edition. Before we get started, I want to talk about three pieces of software that I find indispensable. I once had a friend for whom I have the utmost respect admonish me against shilling for the software companies. But I feel strongly that traders can and should benefit from highgrowthstock.com, freestockcharts.com, and marketsmith.com. So, shill I will. Let's start with MarketSmith. MarketSmith is a set of investment research tools for mastering the market, offering a set of extremely robust stock screeners, charts, and pattern recognition. More importantly, we use MarketSmith to generate our stock checklist, which we use to develop our universal watch list. Take a free trial of MarketSmith. Next, we have freestockcharts.com, which is a Warden Brothers product and has all the versatility of their TC2000 program on an a la carte basis. These are the charts we use in our daily video market review. I use the premium version, but they also offer an advertising-driven free version. And lastly, highgrowthstock.com, HGSI. HGSI is a remarkably versatile product that I use for analyzing and screening data. The Spectrum Analyzer is an HGSI product, and you can get a 1-month free trial of highgrowthstock.com. And you don't even need a credit card. And that's our commercial for this week. Okay, much of what we do at Push Button Stock Trading is based in part or in full on William O'Neill's classic book, How to Make Money in Stocks. O'Neill utilizes the acronym CANSLIM to identify the important elements of what he's looking for in a trade. So let's take a quick look at that. The C in CANSLIM stands for current quarterly earnings and sales, and reminds us that we should be looking for stocks that have a minimum of 25% year-over-year increases in quarterly earnings and or sales, and preferably accelerating earnings or sales. The A in CANSLIM stands for annual earnings and reminds us that we should be looking for stocks that have an average of at least 25% annual earnings growth over the past 3 to 5 years. The N in CANSLIM stands for new products, new management, or perhaps new market conditions. The N reminds us that we need something new and exciting to sustain longer-term profit. The S in CANSLIM stands for supply and demand and reminds us that we want to favor stocks that have an average daily volume of at least 500,000 shares and trade at least 140% of their average daily volume on the day that they break out. The L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. We'll come back to that in a little bit. The I in CANSLIM stands for institutional sponsorship and reminds us that we want to find stocks that the institutional or professional fund managers are accumulating. And finally, the M in the CANSLIM acronym stands for market and reminds us that according to research, 75% of all stocks will follow the market. It's critical for our success that before we begin trading, we understand the current trend in the market. Okay, as we noted, the L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify the market leadership on a daily basis. So let's get started with that. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 11 came from application software, 8 came from biotech, 7 came from semiconductor devices, 6 came from the IT industry, and then rounding out the top 5 we had internet media and consumer finance. These may be good places to begin looking for leadership in this market. Let's start today by taking a look at the Russell 2000. The Russell on Friday broke convincingly above this area of resistance that we've been watching here in the 1140 range. Notice how we took out that resistance and We closed right smack at the top of our daily trading range. That's a bullish indication. It also sets up an assault on the recent high in this area on the Russell. And once we break above this minor resistance, we can take a look at trying to recapture the old high in the Russell, which is right now in the 1205 area. Let's take a look at the NASDAQ Composite. But before we do that, stocks traded broadly higher on lighter pre-holiday volume Friday. Trading volume on the S&P 500, while light, was still above Thursday's levels, giving the S&P an accumulation day, made the more bullish by the fact that it came on a day of generally weak trading volume. The NASDAQ, the S&P, and the Russell 2000 all closed at the top of their daily trading ranges. The Russell 2000 and the NASDAQ also were able to recapture areas of significant long-term resistance, although both have shorter-term minor resistance areas to yet overcome. The NASDAQ recaptured stubborn resistance in the 4900 area. Now we'll see if we can better our recent market high in the 4940 range. Distribution, or professional selling, so much a concern 2 weeks ago, has fallen to a much more manageable level. Currently both the NASDAQ and the S&P 500 have only 5 sessions each, and we haven't added a distribution day in well over a week. In light of recent market strength and the aging distribution, the Investors.com market outlook is in a confirmed uptrend. Meanwhile, our market timing model is on our most aggressive buy rating, a margin signal. A margin signal indicates that aggressive traders can leverage their portfolios utilizing margin. More conservative traders should be working toward fully invested. Friday, advancing issues topped decliners by better than 2 to 1. New highs handily outpaced new lows. According to our Ramosi ratio, small capitalization stocks bettered large, and for the first time in a while have edged large caps on a 10-day moving average basis. Bulls would prefer to see small caps outperform. Our Ramosi swing timing model is indicating an overbought condition in the market. Keep in mind that an overbought market can become severely overbought. It appears that the market sorted itself out in favor of the bulls. Both the NASDAQ and the S&P 500 have recaptured their 250-day moving averages and decisively broken out above short-term downtrends. Our distribution count is no longer a concern. Our market timing model is now on our most aggressive buy signal. Traders should be working toward fully invested, but as always, keep your stops current and in place. Okay, on Friday, the NASDAQ Composite was up 31.73 points, or 0.65%. Notice how we took out resistance right here in the 4900 area, and we closed right at the top of the daily trading range. That was bullish. We now look at this area of minor resistance right here just below the 5,000 level, and we'll see if we can take that area out in this coming week. Trading volume, as you'd expect on the day before a holiday weekend, was very light. For you followers of William O'Neill, we are in a confirmed uptrend in the market. We have been since February 18th. We have only 5 distribution days on the NASDAQ, and notice how none of them have come in well over a week. This is aging distribution and is much less of a concern than it was a couple weeks ago. Right now, the NASDAQ seems to be bracketed by support here in the 4900 area. We'll watch this trend line. This trend line has been a problem in the past. This trend line goes all the way back to the beginning of the bull market back in 2009. We'll see if we can better that trend line, and then we'll see if we can recapture the recent high in the market just below the 5,000 level. If we were to break above that area, the next significant area of resistance is up here in the 5164 range. Right now our market timing model is on a margin signal. That's our most aggressive buy signal, and indicates that everybody should be working toward fully invested. If you're inclined to use margin, you can go ahead and do that at this point. Let's take a look at what the S&P 500 is up to. On Friday, the S&P was up just under 9 points, or 0.43%. We closed at 2099, closed right smack at the top of the daily trading range, which is bullish. Notice how trading volume, which you would expect to be very light on the day before the holiday weekend, was actually above the prior day, which gives us an accumulation day. We are in a confirmed uptrend on the S&P. We have been since February, and we have only 5 distribution days on the S&P 500. And as noted on the NASDAQ, none of them have come in the past week. This is a very bullish distribution count. After all of the concern and angst we've had over the distribution count over the past few months, it's refreshing to not be concerned about distribution at this point. Our market timing model is indicating a margin signal on the market. I'm sorry, on the S&P 500. Right now the S&P is bracketed by support down here in the 2044 area and resistance up here in the 2116 range. We'll see if we can take this area of resistance out this week. Before we go, there's a few stocks that are setting up in flat bases that I'd like to take a look at. A flat base is a bullish trading pattern. It's an area where a stock trades for at least 5 weeks within a 15% trading range. It generally happens as a second stage base, although sometimes it'll set up as a first stage base or a first stage base on base. It's a bullish trading pattern, and we're seeing a lot of flat bases. So let's take a look at a few stocks, but before we do that, just a note. All of the individual stocks that we talk about in our video market reviews are from our universal watch list. To qualify for our universal watch list, a stock has to have satisfied at least 72% of our stringent technical and fundamental criteria and continue to satisfy at least 62%. Out of our trading universe of over 7,000 stocks, there are generally only about 50 to 90 stocks that meet these strict criteria and make our universal watch list. These are the only stocks we review in our daily video market review, and for the most part, they're the only stocks that we use in our trading strategies. That noted. First stock I want to take a look at, Masco Corp, manufactures cabinets, plumbing, and other products for the home improvement and construction markets. Notice how Masco put in this first stage cup with handle base right here. We broke out around this area, and we're now working on a flat base. This is a base on base formation. We're still in a first stage base. We have a $32.92 pivot point. Masco gets a 72% checklist rating, and may be worth a look by both conservative and aggressive traders. Notice the flat base. The flat base stays within a 15% range and has to be at least 5 weeks in duration. The pivot point is going to be the high of the left side of this basing formation, which in this particular case is $32.92. Masco might be worth a look by both conservative and aggressive traders here. Next we have Hasbro. Hasbro manufactures traditional and high-tech toys, games, and interactive products sold worldwide. Again, we've got a base on base formation. Hasbro put in this first stage base. We broke out of that base. We actually gapped out of that base on earnings and immediately set up this first stage base on base flat base formation with a pivot point up here in the 88.53 range. Hasbro gets a 68% checklist rating and maybe worth a look by conservative and aggressive traders here. And finally, we have Acuity Brands. Acuity is a holding company engaged in the production of lighting products for the industrial, commercial, and residential markets. Notice how the stock put in this second stage cup with handle base. We broke out of that base, actually right in this area, and immediately came up and began this second stage flat base. This is a base on base formation. We have a pivot point of $280.83. We have a 76% checklist rating. And notice how nice and tight this flat base is. That's the type of tight trading that we want to see before a breakout. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs Incorporated believes to be accurate. Ohanneson Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.